All right, it is 2 o'clock on Friday, so we're going to jump right on and get started. How's it going, everybody? My name is Burdette Tatum, and we are here once again for our weekly business office training. And super excited to dig in again. We love to do these things and really have a vision and a passion of empowering the business office at every community, right? And if we can touch every community, one at a time, then I think we're doing some good. So we've dedicated this call to you all, so business office leaders and communities, across the globe. If you plug into this, we believe that you'll get some good content, and just here's something that can hopefully allow you to do your job better, have more confidence in your job, just feel empowered to understand as we try to break down some of this stuff. And so, again, like I said, my name is Burdette Tatum, and we are bringing this accounting support to you. And we do it weekly on Fridays at 2 p.m. Eastern. Okay, so let's kind of jump in. Last Friday, we talked about reservations. We talked about the reservation process and what that looks like. We kind of use that as the start effectively. So remember, the whole backdrop is there are things that are happening in the community, and then there is a parallel business cycle and accounting cycle that runs with that. So there's data that we want to capture. So in the case of reservations, there's financial data that we want to capture, that we want to put into the system, so that we are accurately accounting for things that are happening in the community. So if you guys didn't know, you're essentially accountants, and you're recording those transactions. And so that's where we come in, and we want to help empower you and support you to just understanding that. So I really want to try to break down what the financials look like, what financial statements that you're hitting, and really use this time on this call to talk through that. So remember, last week we showed you some financials, which we'll get into, but this week we're going to talk about move-ins, and we're going to pick up from the reservation process, right? So we collected the deposit, we've accounted for that in our system accurately, and now now that resident's ready to move in. So maybe it's 3 weeks, 4 weeks, a month later, that resident, a month and a half later, whatever, that resident's ready to move into our building. And so now we continue on that process. And the move-in series is, I call it a series because it's probably going to take some time. There's a lot of things that go on, because we move somebody, we move a resident in, and then you have a lot of things that take place, unit transfers, rate increases, monthly billing, putting ancillary charges on there. And so I just want to kind of walk through that, process and those different things, capturing that financial data into the accounting system. Okay, so without further ado, let me go in and share my screen. We'll move on to the next screen, if you will, and then we'll keep going from there. So, all right, so we are looking at a very simple set of financials. And again, just want to link it. Want to link the things that you're doing to the financials, right? Because if it's something that you have not seen before, been involved in, as business office leaders, and supporting your president, executive director, supporting your operator, the property accountant, I want to break down some of that lingo and just talk through the things that you're doing and how it impacts everything. So last week we talked about the reservation, right? And so we have cash now sitting here on the balance sheet, and we have a reservation deposit sitting here on the balance sheet, because we know in our space that there's a lot of cases where if the resident is not moving into our community, unfortunately, for whatever reason, because we want residents to be in our community, that deposit in many cases will be reimbursed. And so that's why, from an accounting standpoint, we want to reflect that as a liability. So cash in the account, because you guys have already batched the receipt first. You guys have already put the money in the account, right? That was we always do that first before we batch the receipt. And then you've batched the receipt, so we've put that on a ledger. And like I said, when we built the charge, it's a liability. So now we have move-in that happens, and so this is where we get to interact with the income statement, right? So two financial statements we're looking at. We got the balance sheet, and we got the income statement. Balance sheet is going to show assets, liabilities, equity. Income statement is going to show our revenues and expenses. And so we know that now when that resident moves into our building, that information, that reservation deposit will become revenue. We can now recognize that liability, right? That's the language used in accounting. So, because it's no longer refundable, right? So now once they moved into a building, we can count that as community fee revenue, and that's revenue that's going to go to the bottom line. And so there's some things that we're going to do in an accounting system to make that happen. And so, if we look at it this way and say, all right, so now we've got all those things going. We're ready to move this resident to the building. We've got the lease, we've got all the proper documentation. So back on the overview call, I talked about, I think, pointing to the, and if I didn't, I'll talk about it now, but the importance of understanding the incentives that are going on in your community. Business leaders, I would stress that, and knowing what incentives that your community is offering, knowing what incentives the marketing team has in their toolbox. So when you see these leases come across your desk, and I've seen some creative incentives, and I'm sure you have too, you know how to account for it on the accounting side. So we're not going to dig into any complicated sentence here, but that just brought me to that when I say, hey, we got everything in front of us. So you got the lease. If there's incentives, you understand that. So you're not having to slow the move-in process down and go and run and try to figure out from the marketing team or whoever, the intentions behind the incentives that were given. So I will stress to you all to make sure that the business office and marketing is on the same page, and you understand what incentives that are going on, just with clear language, because sometimes they'll say something, but then we'll get it, or just the intent behind it. So we got the lease in front of us, and ideally we have a payment for the first month's rent, right? So the way we like to talk through it, depending on how you bill. So let's just say your community is going to bill on the 20th. Right. So if we have any residents that are going to move in after the billing date, right, we're looking to collect that prorated month rent. So if they moved in, August 21st, so we're looking to collect rent from August 21st to August 31st, and then the full month of September's rent, right? Your community may be different, but understanding that, and if it's before the billing, then looking to collect that prorated rent, but looking to have that rent collected, because been doing this for a little while, so have seen and heard a lot of horror stories, and not being diligent with the understanding of what should be collected at the time of move-in. All right, so let's look into this example. Okay, so we have, I like to break it down into steps, and we're just going to see how the flow of financial, right? How the activity flows from the balance sheet to the income statement, because I really just want you guys to understand the accounting that's going behind it. Because again, this is the business office, so understanding and knowing what that looks like, diving into the financials and being able to, at the very least, know that the charges you're putting in the system, where they're going. So check resident ledger, always a good habit, right? So we know we have a residence ledger that we have on the ledger is going to show a $2,500 charge, and it's going to show a $2,500 payment. All right, so it's going to look a lot like this, just kind of a real quick display. So you see, last week when we charged it, there's $2,500. There's a payment on ledger for $2,500. So the balance on the ledger is effectively zero. Okay, now we're going to put more charges on the ledger when we move them in, because based on the date we move them in with, Yardi is going to, I said Yardi because we use a lot of Yardi, but the accounting system is going to bill them. There's a lot of accounting systems out there. Yardi is just one of them. So we want to check the ledger, make sure things are right. Check the ledger, got the lease in front of us. I say check the ledger because you're seeing it. Make sure there was a reservation deposit already taken, and it's not somebody that's going to pay the charge on the fly. Just a good habit to just kind of see what the ledger is. Then once you go and make changes to the ledger, go back and make sure the changes are what you intended to happen. Always a great rule of thumb, when we're talking about, at TAS, we like to preach healthy ledgers, right? You want to have healthy ledgers. We know healthy ledgers make conversations with families a lot easier. A ledger can be correct mathematically, but if there's a lot of ins and outs, credits and adjustments and all that, that gives the payer, I know if I was a payer and I'm looking at the ledger and all these adjustments, I'm going to question the accuracy on it or not. So if we can keep clean ledgers by looking, being sure of the charges we're going to put in, being sure of the credits we're going to put in, checking the ledger before I do something, then checking it afterwards will help make sure that those ledgers stay clean. So I'm checking the ledger to see what was on the ledger and understanding where we're going. So we just say that's kind of step one, right? Looking at the ledger, making sure we got all the documentation in place, understanding the landscape before we make any changes. And then we're going to move the resident in, right? As they're moving into the building on the business office side, we want to move them into our system that's capturing that data. So that system that's managing the census and all that, we want to enter that information in, right? So the way your accounting system is going to work, your property management system rather, there's going to be a move-in workflow, right? And in many of these systems, so you're gonna go move in, and there's going to be a workflow. It's going to be a couple questions, a couple things that you need to answer, so the system knows how to, so it can interpret the data correctly and give the output that's desired, right? So one of the things right off the bat is, maybe there's some updates to the context that you can make at that time, right? For whatever reason, when it flowed through the marketing, there's somebody else that should be on the account. It could be a time to add them to the account. And then you're just going to follow the workflow. So making sure you got your move-in dates appropriate, right? This is where that financial versus physical understanding can come into play, right? In many cases, financial occupancy is what's being tracked through the system. But also there could be a component to see the physical occupancy, but it's when is the resident financially responsible, for the suite, is the date that we're going to capture so that the system can appropriately bill them for that time, right? So making sure we understand that. So we're going to move them in through the workflow. This is the time where we're putting any incentives in the system, right? So if there's incentives that need to go in, we're gonna drop that in. So, first full month free, right? Or, there's a discount, a reservation discount, and any concessions that may happen. Maybe it's the third month as an incentive, and it's going to be free. Most of your property management systems to be able to capture that on the front end. Never want to put yourself in a position where there's an incentive. We didn't put it in that term of move in. Excuse me. And then we got to go back and remember, oh yeah, this person was supposed to get May free. And by going back and remember, a lot of times the bill goes out, we hear from the family and they say, oh yeah, we were supposed to give you a month free. So capture that information at the time of the move in. Most of your property management systems is going to allow for that. Excuse me, my voice is kind of crackly. So once we get through all that, we're gonna move if your community does level of care, this is another opportunity. Put all that in. That system should be built out for that, right? So we want to make sure that the system has the things that you're needing. Level of care, that's in there. Make sure it's built out for that, or talk to your accounting group if it's not. So that can be built out and in place for the things that you need. It's all about you, business office leaders. So make sure that your system is aiding you so that you can do your jobs appropriately. So call step 2, we're going to go through the workflow based on how our community operates, based on, the processes that we have in place on how we need to move folks in, sign offs, all that kind of stuff. You're going to go through that workflow. So you've identified the items that were on the ledger prior to doing anything. Now you're going through your move-in workflow. So you've added any context if it was necessary. You have an understanding of the incentive from the marketing team because that's already been understood. So everybody's speaking the same language. And you've kind of gone through that process. You move them in with the right date, right? Financial versus physical, contract date, like having all that information and understood. And so as you go through that workflow, the reason why the property management system is going to ask you various questions is because it's going to then look to build that information. So based on the date that you put in, the property management system, the accounting system is going to build that, right? And when we're linking it back to the financials, right, that's data that then is going to be captured into the financials that are going to ultimately go to the operator and investors. So that last step would be to build in postal charges, right? Because you're going through the workflow, you're telling the system what charges to create. So by the date you're picking, you're telling the system what charge to build. By the ancillary charges or any concessions, you're telling the system what to do. And then once that happens, it's going to push through a charge, right? It's going to push through a charge that will then need to be, you build the charge and then you post it, right? And we know once we post that charge, I always like to preach that that's going to go into the ledger, and it's an ink pen, So before, when it's there and under review, you can go out there, we can make sure that things are correct. I always encourage you, before you post anything to the ledger, again, going back to keeping clean ledgers, review it and make sure it's what you intend to post. Many times you can transport a date, or you thought it was this date and you moved in with that date, and once it hits the ledger again, now it's a credit or adjustment I got to do, and it just makes you all's job a lot harder when you have all this back and forth. So once we have that understanding, um, we are then are able to build and post the charges, right? And so, we get to do step 3, right? Where couple things are going to happen, and first we're billing them. So let's just say it's going to be a full month's rent, right? And we want to on the revenue, we're showing the 5,500. So we've built them. This is accrual based accounting, right? So when we bill, we have AR. We built the resident, so our AR is going to increase. Our revenue is going to increase. And then we're saying this is an assisted living resident. So now we've built them, we got AR going up and the revenue is going to increase. But then also what's happening here is, like I told you, we're going to now recognize that reservation deposit, because now again that they've moved into a building now, and so we're not treating it as a liability anymore. We can count that as income. And so now we basically moved it from here to here. Okay. And forgive me, because that formula is obviously not what we want there. Would be nice if that was $427,000. But so now that deposit, right? That deposit is now revenue. We're able to count as revenue because they've moved into our building. And so seeing and understanding, okay, how are the financials being impacted by the things that I'm putting into the system, right? And so when I'm going through the Yardies or the all the other softwares out there, and I'm billing the ledgers, our accounts receivable is going up. So it's this times 60, 70, and in terms of how many residents we have in the building, and we have the AR aging, and that's going to correspond to the P&L as revenue. So each time you're billing your residents, you are showing revenue for the business. Again, you guys put together the financials through AP, through the charges. You guys are putting those financials together. So it only makes sense that you understand with each action how that's pulling to the balance sheet, how it's going from the balance sheet to the income statement. So you notice that once we put that in, build and posting on step 3, you notice that we produce revenue and we had AR up, and then you also notice that deposit went away because it's not a liability, and it's an entry where we do because we want to recognize that as revenue. Some of you may have your operators doing an entry, a topside entry, accounts are doing. Some of your communities, you guys are doing that through your move-in workflow. You're putting a charge out there for the revenue, and then you're bringing back the deposit. All that can happen through the move-in workflow. But needless to say, I want you to understand that that's moving from one financial statement to the next. And for this resident, we got a total of $8,000 in total revenue, right? $5,500 from a full month's billing, plus the community fee for the revenue, a total of $8,000 now that we can recognize that revenue. And so, like I said, right? So right with that, we should have a check, right? We should have a check. If this was after billing right on the first, right? We now have a check that we can deposit in the account. Right? We deposited first, going back to the last week's video, deposited first into the account. So we have that deposit slip. Then we can take it to our accounting system and batch that receipt. And there's plenty of systems out there where that can happen, just about simultaneously. But the money's always going in the bank first. We've talked about those reasons why, and now we can apply that to the system, and that's where cash is going to go up because we put money in the bank, right? And then now the accounts receivable is being paid down, so that goes down. So once we build, this is already established, right? Accounting, this is already established. And then once we get that check, we're going to put it in the bank, that goes up, and then accounts receivable is going to go down. So very, very kind of straightforward example there. I'll look to build on this process. What does incentive look like? What if we had a deposit, a discount on the community fee or reservation? What does that look like? How do I record that? We can dig into what, we can look at some creative incentives, right? Again, we've seen a lot of incentives, so we can look at some incentives and how do we account for that. But just from a basic standpoint, where we have the reservation deposit, go through that process, then they move in, liability now becomes revenue, and that's an example of what that whole process looks like. So hope that's clear. It's in video, so no need to repeat it. So you guys watch that. Hope that's helpful. Just going back to the whole reason why we're doing this call is this is for you, business office leader. Once you feel empowered, once you understand the financials, really want you to just do whatever we can to help you support your president, support your communities. So we are a team that you can lean on. Again, my name is Burdett Tatum. I feel like I need to have a nickname, like Mr. Business Office or something. So and again, the thing behind that is I'm here to support you. So I want you guys to know that. So again, appreciate the time. Join us next week. We'll dig more into move-ins. If this is content that's beneficial, these videos are on our YouTube. Check it out. I want to hear from you. And we're going to stay here and be here for you. We're going to support you. So you can count on us every Friday. Join in, watch it, replay it. Let me know what you think. Awesome. Thanks so much.